Hey people, this is Conrad Layn here. I want to give you a quick walkthrough on what is the best Turo insurance plan to select. That's a pretty difficult question to answer, but I'm going to do my best to answer it with the most perspective on which policy you should pick. And without saying, I want to say everyone's different, everyone's in a different situation, financial circumstances, and risk tolerance and level. So with that being said, my first answer is that I can't just tell you which plan to pick. But what I can do is show you a strategy I implement that has worked for me to pick the right insurance plan, Turo Insurance Plan. And I'm gonna leave a few links below, and I'm also gonna leave an article below, and that goes deep dive into Turo's insurance plans. It's a Turo article. I'm also gonna leave 3 videos below that show you how to properly document your vehicle so that if you are in an unfortunate claim, you're taken care of, and a few other videos that you should really check out that help you not make mistakes when you are taking pictures or when you're filing a claim, and what mistakes to avoid. Follow the links below, people. Always follow links below. I leave a lot of links below, and I left 3 videos, 3 gems below. Watch all the videos so you can learn and become more informed. But let me dive right in. So let me answer the difficult question. It's a bit cliche at this point, but the best policy to pick, it really depends, but this is the strategy I implement, and you can use it for yourself if you feel comfortable. This is what I do. When I acquire new vehicles, or when I purchase new vehicles, or whatever the case might be, how I come about getting a new vehicle to add onto a Turo platform, what I typically like to do is this, and I highly recommend this for me, but maybe it might not work for you, but I think it's a really smart way to do it that can work for a lot of people. This is essentially what I do. So I always select the 60 first. Most hosts that I've met had the 75, which has a deductible, a $750 deductible. The Turo Plan 70 has a $250 deductible. The Turo 60 has a 0 deductible. So the reason I select the Turo Host 60 plan, as soon as I get a new vehicle on the platform, doesn't matter if it's new, doesn't matter if it's used, whatever the case might be. The reason I select that is because I'm able to gauge from that point on. So if I send my vehicle out the first day, say first day on the platform, right, and it gets in an accident, I know, at least rest assured, I have a $0 deductible, and I also have the option to get something called host pay, which none of the other plans actually offer. Host pay is basically business interruption insurance at its finest, and what that means is basically you're paid daily for the amount that you've accrued based on how long your vehicle's been on the platform. Now, it'll probably be a very low figure if it's the first trip or the first few trips, but you at least still get something. Or you can even get another rental car coverage, which is cool too. Only a 60 offers that host business interruption insurance coverage, what we call riders and insurance. So what I do is I always, doesn't matter if it's a old vehicle, a new vehicle, a luxury vehicle, a commuter car, simplicity at its finest, doesn't matter what car I put, I always select 60 for this reason. The reason is this. Because if I select the 60, if anything happens, $0 deductible. It sucks. Imagine having to go the first trip, you get in an accident, you have to already pay $250, and you might have not even made $250 yet, or you have to pay $750 if you selected the 75 plan, and you haven't even made $750. So what I typically like to do is, typically I will leave my vehicle on until I accrue an amount of $250 of earnings, and then at that point I can decide, hey, maybe I want to select the Turo 70 plan and go up a few notches, because hey, the one thing, the 60 plan is great, but it is the most expensive, and most hosts do not have the 60. They have the 75, the ones I've met, at least from doing my due diligence. It's because 60 plan takes 40% of your bottom line profit, so Turo will take 40% and you make 60% of the booking. If you select the 70, you keep 70% of the booking, and Turo keeps 30% of the booking. If you pick the 75, you get 75% of the earnings, and Turo gets 25% of the earnings. And if you select the 80, etc., you get 80% of the earnings. Turo gets 20% of the earnings. So the larger the deductible, and also the higher the plan goes up in tiers. So if it's an 80, you pay a much higher deductible. And just like if you pay a 75, you pay a much higher deductible than this $0 deductible. You're paying more, but you earn more. So what I like to do is I start off with a 60 plan, and then from the 60 plan, depending on how comfortable I feel, I'll move up to the 75, and now I have $250 accrued in my bank account. And then once I get to $750, now I have the choice. I either can stay there, or I can move up to the next plan. Say, you know what, I have $750 saved up for a rainy day, just in case I need a deductible, I'll move up to the 75 plan. So now I'm earning more income. The deductible's already in my account, and so if something does happen, I'm not too bummed because, hey, at least it's not on the first trip. And if it does happen on the first trip, remember I have the Turo 60, so $0 deductible, you're good. And say after 10 trips, for example, you get in an accident, hypothetically speaking, and I have $250 accrued by that time, then I pay the deductible, bada bing, bada boom, done. Same with the Turo Plan 75. It's a $750 deductible. If I essentially save $750 from bookings from internal earnings, I at least have it in my bank account. So now I can start earning more income, bring up the plan so I can start earning 75% as opposed to 60%, and Turo only take 25%. I'm also leaving another video below. There's an awesome benefit Turo has just implemented. They are paying a 5% increase on all Turo insurance plans except the 60. So if you have this Turo 70, the Turo 75, the Turo 80, the Turo 85, you're getting a 5% bump with a 5% in income increase. What that means essentially is this: if you have this Turo 70, you keep 70%, you pay Turo 30%. That essentially the percentage you'll start to be paid for the 70. You'll be paid 75%, and Turo will earn only 25%, which 5% is huge. If you selected the 75, you used to be paid 75%, and now you'll be paid 80%, and Turo will be paid 20%. And essentially, and goes on and on. If you select the 80, and it used to be paid 80% of the Turo 80 plan that has a much bigger deductible, but you're paid a lot more for taking on more of the risk. But now it gets bumped to 85. So huge benefit. Turo invested $30 million into us host, and I left a video below that goes deep dive into the 5% bump and so many other treats that you gotta learn and educate you about. You're gonna make a lot of money this year. Turo has so many great plans. Look at review the link below. I left 3 videos. One that goes over how to properly document so that you're not in a situation of having a claim issue. Second, it goes into detail about mistakes not to make, 2 common mistakes. And third, I go deep dive into the new Turo implementation of their strategy of investing $30 million into hosts, which gives you that 5% bump, which is phenomenal. And we're paid even more for deliveries as well. We're paid 90% of deliveries as well. So they went significantly balls to the wall, and we're good to go. Like, I love it. So we're making a lot of more money now as hosts. But this is the thing though, always remember this. That's the plan I implement. It might not be right for you. It might not be right for anyone else, but I think it's a good implementation and something to consider. I typically would start off with a 60 at all times. So it's you. So if you get in an accident, if your guest gets in an accident first trip, you're not coming out of pocket over $1,600 for a deductible. You're not coming out of pocket $750 for a deductible. You're not coming out of pocket for $250. That's very devastating, and actually could change your perspective on risk mitigation and asset risk reduction, because you start feeling scared to put your car on a platform because you had a bad experience. But hey, even if your car gets totaled, but knowing that you pay $0 is very comforting. So yes, you're going to take more of a hit, and you have to pay more out, 40% to Turo. You keep 60%. But look at it in the long run that you're doing it maybe for the first 10 trips. Then after 10 trips, after you accrue the first amount, $250, move up to the 75, $250. And then we get to $750, so keep that savings, keep it for a rainy day. That's your deductible. You should be doing this anyway, saving money for a rainy day for your deductibles. And then at this point, however, then you move up to the Turo 75. And if you want to go to Turo 80, 85, do the same thing. Save the deductible. That's the amount you would need. If, say, you need $1,625, $1,600 deductible, save $1,600. And by the time you earn $1,600 on the Turo 60 or 70 or 75, then move up to the next. So only move up to the next tier so you can get paid more, but keep the savings reserved for your deductible. And that's what I would recommend. So it's not a matter of which plan you should pick. It's show you my psychological strategy that I use that has worked for me. I'm a Turo Power host and All-Star host, 5-star ranking. Check my link below. I left my direct Turo link below. So you can check my direct Turo link below to see I'm telling the truth. I am a 5-star host. I have a lot of great reviews. I take great pride in this. I love the opportunity. Second, I'm a business consultant, and I actually specialize in insurance mitigation. So that's pretty much what it is. So Conrad Layn out. Peace.